In this video, I want to break down fair value gaps and inverse fair value gaps, what they actually are, how they form, and more importantly, how I personally use them in my trading. There's a lot of confusion around these concepts. A lot of people either overcomplicate them or just misuse them completely. So this isn't going to be for theory or anything. I'm going to show you exactly how I look at them, when they matter to me, when they don't, and how they fit exactly into my process. If you've ever felt like FVGs or IFVGs worked sometimes and failed other times, this video should clear that right up for you. Let's get into it. So first, we're going to be starting with fair value gaps. Fair value gaps are a 3-candlestick pattern. It's usually when there's aggressive displacement in a singular direction, creating what we call an imbalance. So on YM here, we're looking at the monthly chart. If we look very closely here, you have one pattern or one candle, 2, 3. So your first candle, second candle, third candle. Now, the imbalance comes from the low of the third wick in the high of the first wick. Okay? Now, this is a bullish fair value gap, okay? So three candlestick pattern, okay? 1, 2, 3. High of the first candle, low of the third candle. Okay, that's your bullish fair value gap. For your bearish fair value gap, we're looking for the exact same setup, but for bearish. What do we have now? 1, 2, 3. 3 candlestick pattern. The low of the first wick for bearish. High of the third wick. There is your bearish fair value gap. Okay? First candlestick, second candlestick, third candlestick. First candlestick's low, third candlestick's high. Bearish fair value gap. Now, fair value gaps aren't always, they're not always, super important, right? So if we got into the 1-minute time frame, right? We're going to see a ton of fair value gaps, right? So you have to have context behind your fair value gaps. Now, price only chases 2 things, okay? Imbalances and swing highs and swing lows. So what does it do? It goes from swing highs to swing lows to imbalances or vice versa. As you can see here, ton of FVGs. You see how many there are? So you can't watch my video and then go down to the 1 minute and 2 minute and 3 minute time frame and start trading FVGs, because I promise you'll get sideswiped. This like you can see how like you look at this chart and you'd be like, oh, that's like just reversal here, dude, and then you scroll out, bro, and it's just chopping, right? So there's a lot of fair value gaps. Not every one is important, but let's kind of break through here of kind of what I do, right? So a higher time frame is where your head needs to always be at, right? So anytime you think of looking for imbalances and swing points, always go higher time frame to lower time frame. So we're going to mark out that first one. That's definitely a target for price. Why? Because price has not fully mitigated the FVG yet. And also, it left a nice little swing low. So this makes it a little bit more attractive too because of that swing low. So that makes it a more probable fair value gap, right? Main reason being it hasn't been mitigated or fully closed through or run through yet. You can see it tried to, but it still hasn't. There's still some liquidity right in this void here. Okay? Go to the weekly time frame. Same thing. Look, so you can see here, right? This weekly, right, was a fair value gap, turned into an inversion, then got reused for support. We're gonna go look at that on a smaller time frame. Now this fair value gap, right? I had a question in the Discord from somebody, and this is going to answer their question pretty much right off the bat here. If you have a fair value gap that is used like this, right, many times, I absolutely consider this still an area where price will react to. Because, I mean, look at how long it held price, or look how long price reacted to it, I should say. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks of price reacting off this zone. So this zone on the weekly time frame would be absolutely a valuable area to have on your chart because you just have all the evidence. The data is right in front of you. Look how many times price used it, okay? Then we have the daily, okay? This is another probable one. Why? Because it has not been fully mitigated and it also left a nice little daily swing low, okay? So they form 3 candle pattern stick. First, bullish and bearish. The bullish ones, it's going to be your first candlestick's high, your third candlestick's low, okay? Bearish, it's going to be your first candlestick's low, your third candlestick's high, okay? And now, the biggest thing for these fair value gaps is you're really looking for unmitigated fair value gaps. When I say unmitigated, you're looking for fair value gaps that price has not driven through yet, fully. I'm not talking about wicks in, right? These are still really good, especially when it's a daily swing low, or we had the, I think this was the weekly or the monthly swing low. Yeah, it's a weekly swing low. Like, so these are very, very valuable, right? Because we still have not fully mitigated the fair value gap. And if we go over to NQ real quick, oh, not NQ that ain't NQ futures. If we go over to NQ and you guys look at this monthly time frame, this is kind of what I'm looking for. Do you see how these unmitigated fair value gaps? These will eventually get taken or tapped into. It will eventually happen. I can't tell you when. I don't know what catalyst will bring it, but those imbalances will absolutely get filled at some point. There's no wicks in them. These are perfect. So like stuff like this, right? If you have an unmitigated daily fair value gap, if you have an unmitigated weekly fair value gap, unmitigated monthly fair value gap, make sure you have it on your chart because price will eventually draw to it. And if you can understand, right, like let's say the monthly chart starts coming down to this 24,166 low, right? I'm automatically, first thought is this monthly fair value gap, bro. That's where price is going to end up drawing to if we end up all the way down at this low, okay? So that's your fair value gaps, guys. Next, I'm going to break into inverse fair value gaps. Inverse fair value gaps are exactly what they sound like. They're the opposite of a fair value gap. So what we just talked about previously, right, was what if a regular fair value gap was, right? So, I mean, you can see plenty on this chart, right? So what are we looking for here? We're looking for the opposite direction of that fair value gap, right? So there's a good example right here. We have the fair value gap. I love when this doesn't show up, right? It just shuts off. Doesn't even make any sense. Fair value gap right here. You see how price ends up closing through it? That's your inverse fair value gap. You see how price ends up closing between two here, though? Which is interesting, right? We'll get into singular and combined fair value gaps as well in this clip. We're looking for price to close above or below the fair value gap, okay? Here's another example of it, okay? Price closes above the fair value gap, okay? Price originally on this candle rejects the fair value gap. What does it do after it closes above it? Doesn't mean that the move's going to go up now because look what happens. Comes all the way down, disrespects it, then comes up. So you can't use every inverse fair value gap. You can't use every fair value gap. There has to be context behind it, but that's what we're going to break down in this video. So let's pull up our checklist here. So in this checklist, there's 5 key things we're looking for before taking an FVG setup, and we're just going to break them down here. So the first thing is going to be a sweep of liquidity. So we're just going to break down the 5-minute here. So on the 5-minute time frame, this is NFP. Okay, so this is on Friday. We did trade this, and this is a trade we took, okay? So this is exactly why we're going to show it, because it was a really, really good trade, and it's a great example of something you should take. So let's just let this run out here to 8:30. All right, so first thing we're going to mark out here, right? And every time NFP or CPI candle comes out, we're going to mark out the data low and the data high. You're going to want to do this on the 1-minute time frame and only the 1-minute time frame, because if you notice this 1 minute wick, I apologize, this 1-minute wick is what we're looking for. Or sorry, I apologize, it was this wick. So your data low to data high. So what do you notice here already, guys, right? We already swept data low. So what is price doing, right? It's going right for data high. So like another model to trade, a lot of people do this, okay? They only trade data candles. So what they do is they wait for the low or the high to get swept first, then they trade to the low or the high. So in this example, right, if a trader knew, okay, I want to see the sweep and then go, they're going to put an order here. They're going to get tagged in here, and they're going to be in this entire move. So let's see how this plays out. Again, we're going to keep watching on the 5 minute. So again, data low is taken out. Now data high is taken out. So both data sets are now taken out. So there's no trade to the data sets. But what did we leave behind, guys? Equal highs. Okay. So sweep of liquidity is going to be our first thing we're looking for. So if we break down and we look over to the right, what are we looking for? Oh, well, what do we have here? We have this high. Let's see if price ends up coming to take that out. Come on. There we go. Nope. Okay. Price comes up. Consequent encroachment starting to tap that 50%. And we wick it. So there you go. So there's now your sweep of liquidity. And what did we leave behind on that sweep of liquidity? Your fair value gap. Let's see what happens now. All right. So now, and obviously because you guys can see it, we have a beautiful 5 minute inversion fair value gap. So if we pull up the checklist, what else are we looking for? Delivery rejection from an imbalance. 4 hour SIBI we are rejecting from. Price is already rejected off this though, guys, for quite a bit. All this right here. But we're also rejecting off of a 15 minute fair value gap as well, right over here. So at the moment, we have our rejection of our imbalance. Okay, what's next? Singular FVG in the leg. Absolutely. Fourth, clear price targets. Well, I have equal lows. Is that a clear price target? Yup. What else? Well, if we look, we have London low, London low, London low, and then we have Asia low. So not only do we have equal lows, we have Asia and London low. So we have 4 out of 4 things we need right now, or 4 out of 5 things we need right now. The last thing is SMT. And we have that, guys. I can tell you that much. We have SMT, so we have everything we need. So this is a trade we're going to end up entering. So let's enter 2 contracts here, guys. 2 contracts. Break-even point, which is super important, guys, with IFVG trading. You have to always have a point where you're going to slide your stop to break even, because you're like, where you're going to place your break-even point is going to be a spot where you know price could reverse, but if it's going to end up going to your true draw on liquidity, if you have the right draw on liquidity, you're going to end up going through that break-even point, not having an issue with it. So our break-even point on this trade is going to be the 5 minute fair value gap, okay? So let's play this out. Stop loss is going to be above the high. Again, you have equal highs here, but you have to have all the context. We have 5 confluences lined up right now to go short. So those equal highs in our eyes are not an issue, and we will just keep the stop above those just in case price wants to do a little sweep beforehand. So let's just leave this these stops here. We'll do London low instead of Asia. We're not going to be greedy. And then let's see how this plays out, guys. All right, so break-even point already hit. So you would now slide your stops to break even, and you are now risk-free off the trade, guys. So there's no risk here anymore, and you would just really let this play out. You could even put a limit 1 order to buy 1 here, but I have to change that. But we'll just let this run out. Boom. At this point, if you really wanted to, you could start sliding your stop, right? Now you're up at least $600 if the price was to come back. Wicks keeps going. All right, now you want to keep sliding it. Now you're up $1,400 guaranteed. Okay? And you get wicked out. So, guys, there's a perfect trade, guys, okay? You had equal lows. You had London lows, a 4-hour and a 15-minute SIBI rejection, a singular 5-minute FVG, a perfect break-even point. Like, guys, there's nothing else here that, like, this is, if you can find this setup once, twice, 3 times a week, you will become a millionaire. It's that simple. And I'm going to show you guys with the results this year. That's basically inverse fair value gaps, guys. There's no other way I can really break this down. Again, obviously these happen all different types of time frames, right? This wasn't even the only fair value gap you could have taken here. You could have taken the 3-minute fair value gap here too, right? Because look, it's a 3-minute singular fair value gap. You get in here on the close and you're in. The only thing that was different here is you had this little wick, so you couldn't leave your stop above it or you would have gotten taken out. Other than that, guys, there's nothing else that I can show you other than get on your charts, start back testing and see it for yourself, or start forward testing it, doing it live time. I'm going to start doing live content, live recordings, so that you guys can see exactly how I trade intraday. I am back full time this Monday. I already have 2 Top Step combines ready to go, and I plan to scale up significantly as I move on. And again, I do it all for free, guys. The last first video I made was completely about the community I've built with my 2 partners. We have 770 members. We have over 400K in payouts. And we're all about discipline. We're all about consistency. We're all about emotionless trading because mechanical trading is where it's at. Trading isn't everything. Money is nothing. The value of money is so distorted, and our society, unfortunately, thinks it's the holy grail, and it's a lot of people's problems, and it's a lot of the reason why money isn't abundant to them. And it's something that I want to lean people away from. I will be coming out with more videos along with psychology videos, stuff talking about money and stuff like that. Again, my results will show. Don't believe me. Don't take my word for it. Go watch other people's videos that say the exact same thing, regarding how money is valued, what it is, all that stuff. They'll tell you the same thing that I will end up telling you. And then my results, again, will speak for themselves. They already have. Again, it's completely free. There's no gimmick. If you join now until further notice, it is lifetime free. So if you join, you will never lose your membership, regardless of if we lock that away, whatever. But our main goal here at Market Maulers is to give a premium service and premium education without absolutely, charging the hell out of you, because we don't believe in it. We do believe in teachers making money, but we do not believe in putting you in debt to do it. We do believe there's enough of that in the market. You're gonna lose, guys. That's a realization you got to come to. You are gonna lose. You're gonna lose a lot more times than you win, especially when you're starting out. But it's what you learn from the losses that changes everything. It's what builds you as a trader, and it's what really tells you if you can be here long term. Some of the best traders in the entire world that got extremely rich took 10 years to really understand and grasp this, because it's not about understanding a strategy, it's about understanding yourself. And that's a whole nother video. Other than that, guys, I love you. God bless you. I hope you have a wonderful weekend. I'm back on Monday. We're going to start absolutely running stuff. Glory to God. Glory to Jesus. He is my foundation, my beginning, and my end. And again, if you guys enjoyed this video, if it resonated with you guys at all, leave a like, subscribe, and I'll see you guys again next time.